Spot will dominate audio. Hello, everybody. This is Stockerfinance. I'm your host, David Scheuer. Make sure to follow me at Stockerfinance for more information and news. This is a bullish analysis on Spotify, and I actually made one a little while ago on May 25th. I uploaded it to YouTube. It was a Spotify analysis, why I'm bullish on Spotify stock. At the time, Spotify was at 192.74. And now Spotify is at 270.72. It's up actually about 40%, over 40% since that video. Just been on a rampage. Year to date, it's over 78.55%. Actually, a little more than that, which is just incredible. And let's dive into the numbers here. And I'm going to give you a little bullish summary. I'm going to counter some bearish claims to Spotify and just do a little full analysis of this company that I find so interesting, especially with all the recent news, acquisitions, and different things going on with this company recently. So first off, let's look at the numbers here, and let's just do a little quick analysis. I'm using hypercharts.co if you want to see these graphs for yourself. A great company, really makes financial data simple to use, and those are the graphs that I'm using for this video. So first, we're looking at monthly active users. You'll notice that there's two segments here. There's total monthly active users, and then there's premium subs. The interesting thing here, in my opinion, is the fact that premium subs only makes up about half of the total monthly active users. However, if we look at revenue, premium subs make up, despite just being half, make up nearly all of Spotify's revenue. So Spotify, in my opinion, one thing it really needs to improve on in the near future is capitalizing on those ad-supported users who aren't paying for that monthly subscription, which I know they want to just convert them to it, but a lot of people, especially during the current situation, can't afford that, and they still want to listen to their music. It's a part of their culture. It's they love listening to their favorite podcast on there, but they just can't pay the $15 a month or whatever it might be. And they need to really capitalize on the ads and monetize those users more to benefit from that 50%, actually probably more than 50% now if we go back to this graph of monthly active users, that they're kind of missing out on a lot of revenue there. And hopefully they will convert to premium subs, but a lot of them just might not. So I think they need to capitalize and try to capitalize or monetize a little better there. But the good thing here is that we see an increase in monthly active users quarter over quarter over quarter, about a 10% increase every quarter here for the past 2 years or more. And that's really incredible to see. It's great that we see sustained growth. It's picking up the pace faster and faster as they expand into new markets. And I'll talk about the new markets that they're expanding into in a bit here, and they actually just recently expanded into a new 13 countries, so they still have a lot to grow despite being at nearly 300 million active users with just under 150 million premium subs, just an incredible amount. Revenue also continues to climb, and that's a great thing to see too. Now, net income is interesting here. It kind of tells a different story. It is not as same. It's not as such a exponential graph as we see with revenue and with monthly active users. Net income, on the other hand, we're seeing a more volatile graph here, and that's just kind of a simple way to put it. But the interesting thing here is that Spotify has been profitable. So there's a lot of arguments for non-profitable companies that are like, how are they worth anything? They're not profitable. Well, it's the future value that this market cap is projecting, and I'll talk about that future value in a second here. But the good thing is it has been profitable in Q3 2018, Q4 2018, Q3 2019, and actually recently Q1 2020 just about broke even. Now, I'm not sure, or break even. I'm not sure what's going to happen with Q2 2020. It's going to be a really interesting quarter because they spent a ton of money on acquisitions and licensing agreements, which I think will cut into their bottom line. But at the same time, more and more people are using Spotify. More and more people are at home trying to listen to music and just hang out. So I expect their usage to be up substantially. So it's really going to be interesting to see what this next quarter brings them. But anyways, if we go on to operating expenses here, the good thing about operating expenses is that there's no one segment that's just dominating the other segment. It's the ratio between the three have been pretty steady. As the company grows, operating expenses are going to grow with it. That's just what's going to happen. I think as they started calming down on these acquisitions and the amount they're spending, we'll see some of that spending money decrease, which means that their margins will increase, which means that they'll be a more profitable company. Hopefully they'll sustain profitability in the future. Right now, they're just really trying to grow at a really, extremely fast pace, to say the least. And if we look at revenue and operating income here, if we just put it all on the same charts here, you'll notice that there is a nice increase for revenue. We looked at gross profit and then operating income. A lot of that just has to do with the amount they're spending right now on growing and trying to sustain their users and just growing that user base, research and development, as well as developing the new podcast platform with video format they're coming out with. So they're working on a lot right now. And if you're investing in this company, it's a company that you really got to look, years into the future at, and not just in the current moment, as we see a lot with tech companies these days. Now let's look at the margins here. The great thing about margins, and they look pretty bad if you look at it. You're saying, okay, below 0% profit margin, that's pretty atrocious. On the graph here, you see as low as 50%. That's pretty awful. But the good thing is if you take just a line from the Q2 2016 and you put a line on the Q2 2020 of the profit margin, you'll notice that line it's going upwards, to say the least. That's a super dumbed down, simple way of explaining this, of a way of explaining that the profit margin is improving. And that's really what you like to see. So all their margins from gross margin, operating margin, and profit margin are improving over time on this long scale, like since 2016, which is a great thing to see for this company, that it is making its way towards profitability and more sustained profitability, but it's just kind of taking a long time for this to get turning. And in my opinion, Spotify is kind of a snowball. It's just going to get bigger and bigger and bigger, and it's really just going to pick up the pace as more users, it keeps expanding, keeps spending money, keeps reinvesting itself. And that's kind of how I view Spotify at the moment, as this big snowball. And I think we're starting to see that effect. And I think we'll see that effect more and more as time goes on here. If we look at cash flow here, free cash flow positive for the last few quarters until recently. And I think a lot of that just has to do with the amount of money they're spending on a bunch of different things, from R&D to spending money on acquisitions and licensing deals, etc. And we'll talk about that more in a bit here. Growth, we see growth kind of slowing down a little bit, but overall it's still, solid growth numbers across the board. Not too much to talk about there. Now let's talk about my bullish Spotify summary. So I have a bullish summary. In the next slide, I'm going to show you a bearish summary to kind of compare the two. And I am bullish on Spotify, and I do own shares of Spotify for full disclosure here. But let's go through a quick summary of the things that I'm going to go through in this episode. So we got great podcast acquisitions and licensing, path towards profitability, growth and expansion, leverage, and a new music deal, which I think the leverage and a new music deal is something that you're really going to want to pay attention to. I think it's a huge deal for Spotify. And then a little competition as well. If you take a bearish approach to Spotify and you were to summarize it, you might hear they're not profitable, they're overvalued, acquisitions won't carry viewers/users over, and competition. Now, I'm going to try to dispute some of these claims and also just talk about it and kind of have a discussion. And if you have any criticisms, if you have any comments about Spotify or my opinion on Spotify, go ahead and comment it down below or tweet at me at Stockerfinance. I would love to hear it. I love having these types of conversations with people. So let's talk about the great podcast acquisitions and licensing. These are a really big deal. They've been all over the news recently. Spotify has been spending a ton of money. But let's break it down and see why they're spending that money. So what they're really spending that money for is to get more users to their platform and to build up this podcasting platform on Spotify. Right now, Apple Music for podcasts is really the place to be. A lot of people are using it, but what I'm noticing is that Spotify, or what everyone's noticing clearly, that they're acquiring all these huge podcasts. And although they're spending a lot of money, I think there is a big argument for why it's going to pay itself off in the future. And in fact, in the near future, Joe Rogan, around 190 million downloads per month, 12 million monthly listeners. Kim Kardashian, 66 million followers on Twitter, 181 million on Instagram. Just a huge amount of followers there. Michelle Obama, 16.2 million on Twitter, 40.6 million on Instagram. Gimlet Media, which is a big podcast producing company, 12 million monthly active users. The Ringer, a sports podcast, 100 million downloads per month, 5 to 10 monthly listeners. That is an insane amount of individuals listening to and downloading podcasts if you were to combine all these numbers together. And then you talk about all the followers on social media that they have. You talk about the promotion that they're going to do for Spotify. Spotify is really building up a huge brand. It's really becoming the new radio, in my opinion. Spotify is completely taken over, and it's going to take over more and more. Now, the one problem that a lot of people are thinking of that we'll talk about in a second here is whether these viewers are going to translate over. Like Joe Rogan, he has a lot of loyal followers. Are they going to go and move to Spotify? Well, they have to, since Joe Rogan will only exclusively be on Spotify. I think it's in about December. I might be wrong at that date. Please correct me if I'm wrong there. But I have a feeling a lot of the followers are really loyal to Joe Rogan, and I listen to Joe Rogan. And if Spotify executes their podcast segment of their platform correctly, it's going to go really splendidly well for them. The one thing they need is, number one, they have video format, which is great. They need that to be, high definition quality video. They also need a comment section. Comment sections in YouTube, it might seem like an odd thing to you, but it's extremely important for a lot of these podcasts, a lot of YouTubers, especially Joe Rogan, where it's a community building around this podcast. They love to, have dialogue back and forth. I love going to the comment section. Sometimes on Joe Rogan podcast, I'll just scroll down to the comment section and read what's going on. It's just super interesting. So Spotify has that. And you can tell that Joe Rogan's listeners, just by going in his comment section, are really worried about this. If they have and implement the comment section in the same segments and they don't change too much from Joe Rogan's previous, how it was previously operating, it's going to perform really well. Now, the interesting thing also is how many of these users are going to translate into paid monthly subscribers. Well, if we just look at the amount of if we just look at the, the monthly active users, it's about 50%. And I think that 50% will translate over to the users coming over to Spotify. So I think we'll see about 50% of listeners to Joe Rogan, all these different podcasts, will translate over to monthly subscriptions. And then the other 50% will be wanting to still use it for free. And that's why, 50%, Spotify's not really fully capitalizing on them and not really fully monetizing on them. 50% of their revenue should be coming from ad-supported users and 50% should be coming from monthly subscriptions. Obviously, the monthly subscriptions are recurring revenue, which is much more valuable in the long run, but Spotify still needs to monetize and capitalize on those other users, which it's really not doing right now. So that's something I would like to see in the near future. But they're just the promotion and the brand recognition they're going to get from all these different people coming. I think these acquisitions are just absolutely perfect for Spotify. I think they're choosing really well. They're spending a ton of money, but also these podcasts bring in so much. I mean, Joe Rogan, has reportedly bring in around $30 million a year in revenue, which is just incredible. Now, Spotify just has the licensing for him, doesn't own the Joe Rogan podcast, but I still think the amount of revenue that they're going to bring in the long term, if you take a long-term vision at these acquisitions, it's going to turn out well for Spotify. Now let's look at a path towards profitability. They have been profitable in the past. This is a really key point to make. When you look at other companies who haven't been profitable, let's say Uber, for example. I know I hate on Uber a lot on this channel, but let's just take Uber, for example. It's, it hasn't really shown any path towards profitability. It's spending tons of money. There's no really clear chart. Its margins really poor. But then you look at Spotify, and it has been profitable in the past, so it's already proven it's possible. And right now, all it's doing is spending tons of money to grow faster than the competition, take over the untapped markets, and to acquire content, similar to how Netflix is acquiring content, to long-term investments. So all of this is just long-term investments, and I think they're going to pay off in the future. So far, they do appear to pay off in the future. We're going to see what happens, though, as time goes on. And if you look at net income here, just to show you that they have been profitable in the past, and I think just by looking at the margins, as I stated previously, they are headed towards a more sustainable profitability. Just currently, they're spending a lot of money on these acquisitions, research and development, etc., to release their new podcast segment of their platform. So I think this is costing them a lot of money right now, but in the long term, it's going to pay off big time. If we look at revenue segments as well, it's trending in just a great direction. We always want to see revenue increasing as well as margins increase with that. Now let's talk about growth and expansion. Last year, Spotify broke into India, which is a population of 1.353 billion. Recently expanded into Russia, which has a population of 144.5 million. And then you have Albania, 2.846 million, Belarus, 9.485 million, Bosnia and Herzegovina, sorry, I'm pronouncing that wrong, 3.324 million, Croatia, 4 million, Kazakhstan, 18 million, Kosovo, 1.845 million, Moldavia, sorry, I'm pronouncing that wrong, 3.546 million, Montenegro, 622,000, North Macedonia, gosh, jeez, I'm butchering these names, 2 million, Serbia, 6.9 million, Slovenia, 2 million, and Ukraine, 41.98 million. So the numbers and how many people they're getting, just to put this in perspective for you guys, these markets that they're breaking into, which is this year in India, they broke into last year. This is more people than the North America and the European Union combined, or Europe combined. That's pretty amazing if you are to do that. So all the countries that Spotify's in Europe and then North America combined is less than the population that they have recently broken into. So they have tons of room to grow their monthly active users, monetizable users, etc. There's a lot of revenue that's going to be coming for Spotify, a lot of new users, and we're going to see that user chart continue to grow. So this monthly active users is not going to slow down. It's going to keep growing, and in my opinion, it's going to grow faster and faster as it breaks into these new markets, which is just a great thing to see for a company where monthly active users is one of the most important metrics, especially the premium subs as well. Now let's talk about leverage in the music deals, really what I wanted to get to in this episode of Stockerfinance. So the Universal Music Group deal, why is this deal important? It's super important for Spotify. It proves a big thing that I'm going to talk about here, which is leverage. So here's a quote from the Wall Street Journal that I think really summarizes this whole deal. Spotify's goal for the two-sided marketplace is for music artists and labels to pay Spotify for things like marketing and analytics now that more people are streaming songs. It's a quote from the Wall Street Journal there, and that is completely true, and it summarizes it. So to give some context to this, historically, Spotify or other streaming platforms would pay record labels in order to stream their music. But now that Spotify has leverage, and leverage is the key word there, with listeners and advertising, because its monthly active listeners are there's just so many of them, that record labels are now paying Spotify to get their music on Spotify. So for example, let's say a new song is released by a Universal Music Group artist. So an artist signs with Universal Music Group, he's going to release a new song under them. They license that song. So they're going to pay Spotify to place that song on top of the charts in Spotify, or let's say in Spotify, their curated playlist. Now, because of that, that song instantly becomes a hit. Spotify will then pay royalties to UMG, and UMG will now has a hit song to profit from. So instead of the revenue just going one way, just Spotify paying UMG to license its songs and in order to use it, well, now UMG is also paying Spotify. So this is going to drastically improve Spotify's bottom line and their margins. It's going to drastically change how the entire system is working. It's going to give Spotify a massive amount of leverage and a massive edge on their competition, which is great to see for Spotify. So this is one of the biggest deals I think is being very overlooked, in my opinion, by a lot of investors in Spotify, and this is going to pay off huge for them, especially if more music groups start making deals and more labels start making deals with Spotify. It's going to pay off big time for them. But it just shows that Spotify has leverage over these music groups now, which is exactly what you want to see. Now, next up is competition. So nearly everyone has heard of Spotify. I said nearly everyone has Spotify. That's obviously not true. But everyone has pretty much heard of Spotify, at least in North America and throughout Europe, or most parts of Europe. And Spotify will now be able to better compete on pricing as the larger it becomes. So a lot of these, if you're trying to start a music streaming service today, it's going to be very difficult because Spotify can simply lower its pricing and it can just outprice you. And that's something you see with a lot of these big companies. As it become bigger, they can compete on price, and that's something Spotify is going to be able to do. Its biggest competitors currently appears to be Apple Music. However, many are unsatisfied with Apple Music's platform. I did kind of some investigating, to say the least, some ground investigating, some investigative reporting. I went around and I asked some of my friends, different colleagues, different people, my parents. I said, okay, do you guys use Apple Music or Spotify? Some of them use Apple Music. Most of them use Spotify. But I said, okay, why do you use Spotify? And if you use Apple Music, what do you think of it? And do you plan to switch to Spotify? Nearly all of them said, yes, I plan to switch to Spotify. However, the interesting reason wasn't the cost or the price or anything like that. It was because simply the platform of Apple Music is just not as intuitive and not as smooth to use as Spotify. People simply just like the Spotify app more, and I think that's a really big deal. And now if Spotify has acquired and licensed all these different companies and these different people to start producing podcasts like Joe Rogan, Michelle Obama, Kim Kardashian, etc., so you have a better platform and you have all these people exclusively making content on Spotify. The switch to Spotify really seems like a no-brainer for a lot of people. And I think a lot of people are making that switch from Spotify's competition to Spotify. So it's going to continue to take market share from them. The paying user base of Spotify is more than double that of the next rival. And we see that in these stats here. So Spotify has 286 million users. And this is a little bit old too, this data here. And 130 million subscribers. So the next in line is Apple Music, which has 60 million subscribers. Spotify more than doubles their paying subscribers, and it dwarfs pretty much all the others, including Pandora and a bunch of ones I haven't even heard of. To be honest, I didn't even really know that Amazon Music was a thing. It has 55 million customers, whatever that means. But Spotify it's just dominating this whole market, and it's taking more and more market shares, expands, not just in North America and Europe, but throughout the entire globe, like India, Russia, and a bunch of other places as well, as we just saw. So now let's talk about the bearish Spotify summary, and let's dispute some of these claims. So first off, the not profitable assumption here. Okay, it's not profitable. That means it's incredibly overvalued as well. Well, we've already stated there's a clear path to profitability. Margins are increasing in the direction to clear path profitability. We've seen that they've been profitable in the past, which is a great sign. Next up is overvalued. Are they overvalued? This is kind of a tough one to analyze. companies these days, these technology companies, it's really hard because if you were to take a value investing approach to Spotify, you would say it's absolutely overvalued. You know, it's not making money right now, though it has sometimes in the past. It's not right now. It's spending tons of cash. There's no way it's worth $50.34 billion if it's not making any profit right now. But that's not necessarily the case. You see, this market value is projecting the future value, not the current necessarily value of Spotify. So what I mean by that, if that might not be the best way to phrase it, but what I mean is that it is projecting the outward of what it will be worth eventually. So they're seeing this outward value of Spotify and looking at it years from now, investors are, and saying, okay, that's what it's worth now. And so that gets priced in to the stock then, and hence that's why there's a $50.34 billion market cap. Now, to compare this to Netflix, and I like to do some comparative analysis here. I always like to do this when analyzing companies. We see 192 million Netflix subscribers who are paying subscribers. We see 130 million Spotify subscribers. Spotify, you know, not around 60 million less paying Spotify subscribers, but you know, Netflix is its market cap is substantially higher, you know, 4 times or more greater than the market cap of Spotify. So obviously Netflix's comparison isn't exactly the best comparison to make, but it does show that in terms of subscribers, Spotify is catching up to Netflix's subscribers, and if it can continue to gain more and more paying subscribers, and if it can, you know, maybe increase the price, if it can keep, you know, capitalize on its non-paying subscribers, and it catches up to the same revenue that Netflix is doing, the market cap is going to follow that. So I think that's just a little confusion there, but I hope that someone explained the valuation for Spotify. I think it is completely justified right now, especially with the acquisitions and licensing agreements they will make. We have to see if Spotify can prove this valuation into the future by continuing on the trajectory that they're heading towards profitability, towards more users and growth, etc. Now, acquisitions won't carry viewers/users over. This was actually something that I was possibly worried about. So with Mixer, if you don't know, Mixer was a streaming service that Microsoft released. They went ahead and licensed and paid a bunch of big famous streamers such as Ninja to come over to Mixer and exclusively stream on Mixer. They paid them a ton of money. But what happened was their following didn't leave. They just stayed on the platform they liked. The difference here, in my opinion, is that they're choosing people with incredibly loyal followers, as well as just these people. It's a completely different situation, in my opinion. I think you are absolutely going to see a transition to Spotify from other platforms, especially with people like Joe Rogan who have incredibly loyal followers, Michelle Obama, and a lot of these podcasts that are coming are brand new to Spotify, which is going to be a big deal. And as I just stated, they have so many different people that even if Spotify gets 50% of their listeners, they're going to be really a big deal for Spotify. So it is possible some of these viewers / users won't carry over to Spotify, which is a worry of mine, but I don't think it's very likely. It's a completely different situation than the Mixer situation, especially since Mixer was a brand new platform that was really unheard of, where Spotify's really established itself as a trustworthy brand name. I think as long as it executes the podcast platform well, its video format with the comment section, a bunch of different things, that it can just execute it well and have an intuitive, great platform for listeners to use, it's going to be super successful, and followers are definitely going to make the transition to Spotify and follow their favorite podcasters or whatever it might be. So competition. As I said, there's almost no competition that provides a real threat to Spotify right now. You may think Apple is so much money, it's going to dominate Spotify. It could just, unload the bank. In my opinion, Apple's not entirely worried about Spotify. It makes tons of money from other different places. Although it would love to take market share from Spotify. Spotify is just dominating in growth and expansion right now. I don't see competition being a worry for Spotify in the near future. So what's the future for Spot? Well, it's continued expansion across the globe, more ad revenue. I want to see, this is something that I just kind of want to see, which is more ad revenue from non-subscriber users. Podcast segment and video format release will be massive. Eventually cut back spending, which will lead to increased margins and eventually sustained profitability. Continue to take market share from competition, earnings to catch up to the stock price eventually, etc., etc. These are all things and reasons for why I'm incredibly bullish on Spotify, have been for a while. So far, the stock price has been reflecting my view and has been performing very well. So I'm really happy about that. I would love to know your opinion on Spotify, what you think of it. Do you disagree with some things? If you do, definitely comment below. I'd love to hear your disagreements or agreements or whatever your take is on this company. Anyways, thanks for watching. Please subscribe. Let's hit 1,000 subscribers before the end of summer. It would mean a lot. Make sure to check out these videos and follow me on Twitter at Stockerfinance as well. And peace out.